think by this summer we'll be 300 to 500, 300 to 500. And there's umpteen reasons for that, that aren't simple price chart technicals. They're momentum based. They're archivally based. I found numerous markets that have done similar type of explosive shifts into new price realities from an old reality that people got used to, thought was it forever, and then boom, suddenly reality changed, and it didn't necessarily do so with a headline at the beginning. Maybe later you got a headline that smacked you in the face and you said, gee, now I know why it happened, okay? Silver has umpteen reasons to do it. It's monetary valuation, its relative value to gold, its own technicals, all kinds of factors come into play here. And I think that we're in a rampage move and we're in the middle of the clock. See, at the close of November, we started the clock in December. And generally, we expected much of the move, if not all of it, to occur in the next couple quarters. So it says, this summer, okay. And I still think that's on the deck. I think the recent violent, mostly sideways congestion. Yes, if you go back and you pick that $120 peak that occurred in late January and eliminate about 2 or 3 days of that surge, then the peak wasn't 120. That was really like thin air up there, and it didn't stay up there long. But if you look after that collapse, which was a one-day phenomenon, really, it was January 31st, and you had a little bit of follow-through into February 3rd, first day of the trading month of February. But basically the first collapse was a day and a half period. Okay. And then since then, you've gone up and down violently between roughly getting over 90 and lows in the 60s. And if you look at a price chart, and we can't share all our momentum charts because our subscribers pay for that, and we offer numbers based on the momentum fact. But broadly speaking, you look at a price chart, you made a low in February at about $66 on silver. And for gold, you made a low at about $44.23 front month gold contract. Okay, now think about that. That's the spike low. Then you shot up from both of those levels in the metals and didn't come back to them until the war news, the headline. Okay. And on March 23rd, silver finally got back down and took out its February price low. And of course, by doing that, you know what happened. It ran a bunch of sell stops. Okay. Anybody who used the Feb low as their, I can't take it if it goes through that low, and they sold out. They got washed out. So did gold. Gold made that low at $44.23 in February and got down to $4100 on March 23rd. But if you look at what happened on March 23rd that day, silver literally spent a couple hours only below the Feb low and then exploded back up, shot back up into the 80s again. Right now we're trading around 77, 78 as we speak. Gold took out that low, spent like a day below the February low after running all the sell stops, flushing out the late longs, because you shouldn't have been buying gold and silver, frankly, after you and I talked. Our last major buy signal was at $56 on the November close on silver. And the two prior ones are $25 in March of 2024, and then another major buy signal at $34.90 in June of 2025. So we had 3 major buy signals, but the last one ended on that November close of silver where it broke out versus gold, which its relative performance. So since then, we've had this violent consolidation, really, where you can actually draw a line through it and say, gee, I just don't know what way it's going, And I think you've seen your low now. I think that March low was the washout low. And therefore, the technical issue now for the monetary metals is when do they signal that they're in fact coming out of this zone and going to resume the uptrend in a dynamic, even more dynamic way than they did getting up to this zone. Okay. You're near those levels right now. And was a couple more bucks in silver and you've cleared all of our intermediate green light signal levels. Okay. Gold is not far away either from getting up to levels that, no, you look at a price chart, you can't see that it's really asserting itself and going to go blast out through the highs. But there's certain momentum levels that we can see that will be crossed just above today's highs. And when you get there, everybody who sold the war news will be, befuddled. What's going on? I thought it was all over. I thought we're going into a global depression, et cetera. Just the same way as the people who bought crude oil. And we said buy crude oil at 65 in January based on momentum. February transpired, and it was the end of February before the war even began. And by then, if you bought the headline news, you were paying $100, $200, $110 for it. and right now you're a loser. Okay. Anyway, so don't chase headlines. Realize that there are bigger factors in play here. And the monetary metals, I think, are about to resume. The only difference is what comes on the other side of this violent congestion zone is likely to be more explosive and rapid on the upside than what preceded it. I know that there's some debate about the difference here and there, and a lot of people are looking at issues like, the open interest on the COMEX or whether the COMEX will raise margin rates and all this stuff. But that won't stop reality, because remember, if reality's been contained artificially, again, as I explained, silver's stuck in this 50-year range until late last year. Nothing else has. I mean, you look at, for example, when your granddad built a house, it was $450. No, it should be $4,500. And then when your dad built one, it was $45,000, and the median home price now is $450,000. Okay, those haven't been restrained. The price of bread has also gone up quite a bit. You name it, they've gone up. Why? Because of the underlying degradation in the money unit. And if you go back to 1980 and ask yourself, look at an M2 chart, money supply, and look where it is there and where it is now, and look at the gain it's had. Okay. Or go back to 2011 when silver also hit 50 second time, and look where money supply was then versus now. Silver's finally saying, hey, I'm going to catch up to reality. I'm going to price myself. If it even went back to price levels equivalent to the M2, to the money supply that it saw in 1980, you'd be at that, or 2011 even, you'd be up in that $200 to $300 level to $500, just to match the $50 highs we've seen in the past in terms of real dollar value. Okay. So there's all kinds of factors at play here. And I think silver's going to do it in a tantrum. It's not going to let you on board in an easy way. If you're not already on board, it's a little late. But I still advocate, if you're not in it already, consider joining in shortly, because when this thing comes out of this congestion, it's going to produce it very quickly. And if you join in at $300 or $500, you're vulnerable to a sharp pullback, okay? But silver will already then be in a new reality, and I think it's going to occur quickly. And like I said, there's all kinds of reasons for it, including that money supply reason, and and that will be reflected. Well, if for example you go back to 1980 gold and money supply, gold's beat money supply nicely. Okay, S&P has only matched it since 2000, the dot-com high. You go back there, 2000 high, where M2 was, or where S&P is now. S&P has merely matched the degradation in the money unit, the quantification increase in the supply of money, therefore that's real buying power. So all it's done is hold its real buying power, not really gained, although it looks great on a chart. So anyway, that's the reality I think we're facing, and I think the T-bonds and the financial sector, we're particularly watching some key banks, some of which don't look particularly good, on momentum. Price chart hasn't smacked you in the face yet, but momentum is telling us, this guy just broke a leg. That guy broke a leg. That shouldn't be, we're not talking regional banks. I'm talking the biggies. So the weakness we're seeing in the financial sector, the likely weakness in T-bonds, which will provoke the Fed to go ape, all these things combined create a new reality.
So historically, and I've been following the bullion banks and what they think since 2002, when I started buying Krugerrands here in the UK. I was still working as a bond futures and options broker, but I always looked at what they said, the bullion banks, their forecasts. And from experience, to me, they always underestimate gold. They always overestimate stock, S&P targets, but they underestimate gold. So it's encouraging that like some have 6,000 or 5,800, because I think it means that we could go a lot higher once this consolidation is over. And again, they're going to be wrong, maybe not wrong in the direction, but they're going to be wrong in the like how far up it can go. I don't have a target, but that's the way I look at it. The bullion banks are always quite conservative, even though I've seen that Bank of America is calling for like silver to go like possibly to 300 this year. So I think that's realistic. I think there's a big problem there because we've had 6 years, I think, of supply deficit. And as you know, pure silver plays are quite rare. Usually silver gets extracted as a byproduct of other of base metals like copper, and to like get a silver mine going takes years. And I think also the war in the Middle East and what's happening to the energy situation is going to push a lot of countries, especially in Asia, to look at solar and other alternative energies, and you need a lot of silver for that as well. I published a interview recently with Eric Young, who's on X, and he was telling me that China is basically almost self-sufficient in energy, and they focus a lot on electricity, EV, and wind, and other kinds of alternatives, and you need a lot of silver for that. So it's I've heard some people say that silver is the new oil. So yeah, I think we need a lot higher prices just to get the investors interested in maybe opening new mines and developing new mines, because I think the shortage is real. And unfortunately here in the West, like London, New York, and Europe, the price of silver is like kind of being suppressed, in my opinion, and that's why there's a huge premium with Shanghai. And the Chinese and the Indians, well, they're like